I'm not sure now. I see the event is now being recorded. Okay. Hello. Again, this is Clemens Wollmuth from Photon Energy. I'm the CFO of Photon Energy. And I want to welcome you to our company presentation at the Warsaw Stock Exchange Innovation Day today. I'm also having here our CEO, Mr. Georg Hotter, who is joining us for this conference. And we're looking forward to your questions you might have on Photon Energy, on our company and what we do. But maybe before that, we would like to present to you our company up front, which might answer some of the questions you may have. And after the presentation, we welcome your question very much. So once again, welcome. We have prepared a short presentation for you, which is to present you our company. I want to give you first an overview of our company, what we do, present to you our investment thesis, where we differentiate ourselves or how we differentiate ourselves from other companies in the sector, give you a clear picture on our financials, on our results, and afterwards give you an outlook of our plans, which Mr. Hotter will do, and of our strategy. And then we have time for questions and answers. Photon Energy was started in 2008 by Mr. Hotter and Mr. Gardner. Both are in the company, running the company today, and I joined a little later, 2012. The company is CFO. Mr. Hotter, as CEO, is running the strategy of the company, direction. Mr. Gardner is running our operations in Australia and is CTO of the company group. So we are a owner-managed company. Mr. Hotter and Mr. Gardner together control about, at the moment, 85% of the shares of the company. We are listed at the Warsaw Stock Exchange, as you are aware. And which means even though we are an owner-managed company, we are also a very transparent company. We are following the publication rules and even more than that, coming from the Prague Stock Exchange. What we do is we are in the so-called downstream solar value chain active. So we develop photovoltaic projects, we build them, we procure the technology for building photovoltaic power plants. We are an investor ourselves, so we are an independent power producer, aggregating assets, and we provide the long-term operations and maintenance services for photovoltaic power plants. That means we cover the full life cycle of a photovoltaic power plant. Those services we provide for commercial power plants, so we are not in the residential business doing small rooftop installations. Our power plants usually start at the size of 100, more likely 300 kilowatts. The biggest project we have developed was up to 300 megawatts in Australia. So we are in the commercial segment, active in the photovoltaic industry. Geographically, our scope is very much in Central Europe. In 2018, the Czech Republic, rooted in other markets like Slovakia, more recently entering the Hungarian market. We also went 2012 to Australia when we were looking for new opportunities. And Mr. Gardner, one of the co-founders, as I mentioned, who grew up in Australia, decided to take over the responsibility to build up our business there. So we also have a second foot basically in Australia. We have an own proprietary portfolio of power plants. This is as of today 60.6 megawatts, which we have in our own portfolio generating electricity. Those power plants, 15 megawatts of those, which is 11 power plants, is in the Czech Republic. We have another 11 power plants in Slovakia with about 10.5 megawatts of capacity. And we have 51 power plants in Hungary with, at the moment, 35 megawatts installed capacity, and one small power plant in Australia, rooftop installation, which we own as well. On top of this own portfolio, which is our crown jewels, we are having maintenance contracts in the value of more than 300 megawatts. We provide full operations and maintenance. This we provide to our own power plant on the one side, and we provide it also to third-party customers. So it's the 60 megawatts of our own portfolio and another 240 or even more than 240 megawatts external customers, where we provide those services. This is on the one side full operations and maintenance, where we have service technicians in the countries like Czech Republic, Slovakia, Romania, Hungary, Slovenia, and Australia. But also in other countries, we provide specialized services for central inverters, where we, as you can see from the map, cover basically almost all of Europe, where our service technicians are on a fly-in basis doing maintenance services. This is the second very important pillar of our business. The third one is project development. There we are focusing mainly at the moment in Australia and Hungary, where we have most of our project development active, but we will talk about this a little later. We also looked at other markets or started preparing other markets like Poland and Romania, but Mr. Holter will let you know a little more about this in at the end of the presentation. So this is what we do. Our portfolio, I mentioned, is mainly consists of power plants in the Czech Republic, in Slovakia, and in Hungary. All those power plants at the moment have a feed-in tariff, so they have a guaranteed support mechanism for the electricity we produce. This is the power plants in the Czech Republic were built in 2009, 2010. They have a 20-year feed-in tariff, so until 2029, 2030. It is quite, it looks quite favorable with some 570 to 610 euros per megawatt hour, which we get there. However, this has to be considered that also at this time, those power plants, when we built them 10 years ago, the investment costs were much higher than today. We generate electricity about 16.6 or 16.7, 16,700 megawatt hours last year, which turns into a revenue of 9.5 million roughly, if you take this into consideration of a total revenue of 30 million that we have generated last year. The Slovak portfolio, which is 10.4 megawatts, has a 15-year feed-in tariff that was built in 2010, 2011 basically, so still until 2025, 2026 those power plants will harvest this feed-in tariff. This feed-in tariff is a little lower than the Czech one. Also, the investment costs there were a little lower, but it's still 383 to 425 euros per megawatt hour what we get. Electricity generated last year, just to compare this, in the portfolio was about 11 gigawatt hours, and the revenues we have generated were about 4.3 million last year. The newest additions come in Hungary. Those power plants we have started connecting. First one in 2018, the majority last year 2019 and beginning of this year. So they are running until 2043, 2044. There we get about 100 euros per megawatt hour feed-in tariff. Just electricity generated last year was about 16 gigawatt hours. This is increasing a lot this year. Revenues, expected revenue for this year, and this is taking this capacity we have installed with the expected output of those power plants based on the plant data, will be around 4.2 million. This is about the portfolio as such. So just to put us in figures, we have grown our portfolio over the last years in coming from the Czech Republic and Slovakia in our portfolio, in Hungary mainly. This will be changing also here. Mr. Holter will tell a little more on our future plans for what we are going to build here. Our O&M business has grown also over the last years quite a bit, mainly in Hungary, but also in the other markets where we are active, and we're looking for new markets there as well. At the moment, as of May, this was 309 megawatts. And our electricity generation is growing a lot from last year. We generated altogether some 44 gigawatt hours this year, just based on our expected portfolio that we have installed. Based on the expected output of that portfolio, we will be hitting roughly the 70 gigawatt milestone this year. So much about our portfolio. So and the key performance indicators of our business. Financially, what does that mean? This growth I have just shown you before has also been reflected in our financials. Last year, we could grow our revenues by about 49% from originally 20 million in 2018 to above 30 million in 2019. That growth was on the one side coming from electricity generation, on the other side also from our growing O&M business, but also from growing EPC building business and trading activities that we had. The EBITDA did not grow that much. I mean, gross profit as well grew quite a bit in this time. EBITDA was relatively at the same level. That is mainly due to additional administrative and HR costs for doing development work and doing building work on our power plants, which will come to our proprietary portfolio, where we see the revenues only then in the future years. So this profit we will harvest in the future, but we have already partially the costs today. So therefore, this figure is a little misleading. It's maybe also when you're looking, but we will go a little later in our financials. It's always important to not only look on the top figures in our income statement, like revenue, gross profit, EBITDA, but also on the bottom line with the value creation of power plants, respectively, the capital gains we make by exiting, for example, projects which we have developed and then sold. So that's on the revenue and profitability side. Our balance sheet is also relatively sound. We have an equity ratio of about, at the moment, 27% end of the year. Our total balance sheet is about 130 million euros. Our indebtedness is on the one side, when you look at the ratio, might be on the first view high. However, most of this debt comes from long-term project refinancing. So what we do is the power plants we build and have in our balance sheet, we usually refinance locally with banks long-term as much as possible over the life cycle of the power plant. Usually this is right now what we build in Hungary, for example, we can finance for 15 years. So this is non-recourse financing on project level, and the power plants repay that debt over the period of 15 years. So on top, we have a feed-in tariff over 25 years. So there's a tail at the end, which is unfinanced or not yet levered, which might be then in the future give free cash flows or can be re-levered in the future. So much about our key financial indicators. Where we differentiate ourselves, I think, is, and this is also from when you saw at the beginning, our value chain, what we do. I think it's one of the biggest now. Hello? Okay. What makes us different, or what is the difference? I think it's the integrated approach we are having, that we are not a pure asset aggregator or a pure EPC company building power plants or a pure developer. There is many people out there who do either or. However, all those different parts of the value chain have certain pros and cons. Our integrated approach has shown us that this actually the advantages of this are overwhelming compared to completely focusing on just one activity. That is on the one side that we can, with this integrated approach, harvest the whole value chain of a photovoltaic power plant, but also that this is opening for us some opportunities in certain markets, where market conditions, for example, are changing. For example, in the Czech Republic, originally we had a full approach of investing, building, developing, doing O&M. That market came then with the end of the feed-in tariffs to an end for the development business. However, our O&M business in this market is still growing, so we could gain market share there. And we are holding an asset base that is generating electricity there. Or like when we went to Australia, on the other side, we started building small power plants, doing EPC business, looking for our own projects to develop. And out of that business, we saw an opportunity of purely developing large-scale projects, which we would not build in our own portfolio because they are too big, but where we are pure developer and bring them to a ready-to-build stage and then sell them. So those kind of opportunities you can only do if you have this integrated approach, and you can't do just because, or when you want to do that, when you see an opportunity in the market and you start doing that, you most likely would be already too late to market to realize such opportunities. So this is what makes us different, I think, and where we are so far, where we have been in the past quite successful. To the recent figures, and I don't want to bore you too much with some quarterly figures here, just to see what has happened over the last first quarter plus an additional 2 months, which was, I guess, for all of you as well, a very tough, very turbulent, unprecedented time with coronavirus, with the pandemic outbreak in Europe, affecting all of us very much. Our business luckily got not hit that much, and we were very happy that on the one side our energy production, electricity production, is naturally unaffected by such a virus. The sun was shining even more than before in this time, so we had extraordinary good production data if you compare 2019 with the first quarter, and then April and May with 2020. We still could grow our portfolio, so we also had projects under construction in Hungary, and even though there were some regulations and we were following all rules and clearly having safety first for our employees and our suppliers as a principle, we could continue construction. We had some small interruption and small delays, but talking about weeks here and nothing else. That we still connected in the first quarter 8 power plants in the region of Tata in Hungary with 5.4 megawatts, and in May we connected on 2 locations another 5 power plants with 3.5 megawatts. So we were very happy about that, and also our setup that we have, that when we go into a market, we build up local resources there, so we could overcome any problems that came up from closing the borders, for example, that our local teams were the hands at the sites, and by telecommunication we could communicate and still coordinate and organize all the work. So that was working very well in this unprecedented times, but also our O&M business, the maintenance business, basically could continue running. For sure, also here we did a few, we prioritized activities, so we focused on ad hoc and repair work. What could be delayed on preventive maintenance, we tried to delay it if it was possible, and on top of that, we could even grow our O&M portfolio. So we signed since beginning of this year until now 33 additional megawatts into our portfolio, and this trend we can see also is continuing. So we are very happy about this development. What does this mean in figures? Also here, just very quickly, and this is more to explain you generally in our business how to look into our income statement, or what's important to look at in our income statement. So it's not only the top line, as I mentioned, in terms of revenue growth or gross profit, EBITDA, but also the bottom line and total comprehensive income end of the day. And this is maybe just on the top you can see revenue growth, which comes on the one side from electricity generation. Here we were growing by about 20% quarter on quarter in comparison, which comes from, on the one side, the good sunshine, but also the growing portfolio in our assets. And other revenues here as well is EPC construction business we did in Australia. In this time, again, as well, could continue and was actually growing compared to last year, even of the Corona epidemic. Our trading activities continued. They were maybe most hit by the epidemic, that the trading was a little less than compared in Q1 2019. But this is a relatively low margin business, so we are not so it didn't make so much on the profit side. O&M business we also could grow compared to the previous quarter. So this means a total revenue growth of 27% quarter on quarter. Clearly with that, cost of sales increased, but also the gross profit is basically in the same ratio, was growing. Operating cost went up as well by about 25% in this time. So this is mainly HR costs, administrative costs that we are having here, and this is where it starts to look at our activities a little bit more in detail. In this HR costs, for example, we have grown with the development work we are doing in the Australian market, but also here looking for new markets. And these development activities are bringing fruits, or is now an investment we are having here in the OPEX because we don't activate those. But on the other side, expect out of this future revenues from the developed projects when we sell them, even though this will not be revenue, like when we sell a project, it's not shown upstairs in the revenue figure, but more downstairs before the profit, or profit after taxation, basically, when we have capital gains from selling participations in project companies, for example. This brings us to but still with this increased operating costs, we still had an EBITDA growth in Q1 by almost about 30%, from 1.1 million to 1.4 million euro. And here also what is important to mention, when you take those figures here and compare them with last year figures, with the 40 million or 30 million revenues, sorry for that. We are very seasonal business at the moment. So for us, the first quarter and the fourth quarter are relatively weak because of the sunshine, because of the seasons. Second and third quarter is spring, summertime is much stronger. So we generally could say about in the first quarter, we have about 15% generation results from our power plants. And then in the second and third quarter, about 35% roughly. And in the last quarter, again, 15%. So this is the seasonality we have. With our future business growing Australia, this might be balanced a little, or will be balanced a little, since we are there on the southern hemisphere. So they have winter when we have summer, and the other way around. So we can balance this a little out. Further going down our income statement, depreciation was growing clearly. This is because of the increased asset base we are having. So from about €1 million growing to 1.3 million this year. This is in line with the depreciation of our assets over the life cycle, which we have as we have them installed. Then we have net finance expenses, which is mainly interest costs here and some revaluation of derivatives. And here it becomes also a little tricky when you look at those figures, because not all of this is cash expenses. Part of this is revaluation effects, which are unrealized accounting effects, not necessarily real costs or cash-related expenses. But I will go into this. I will show you the comparing figures, what the reality is in cash when we go into the cash flow. So out of this 1.8 million we have there, about a little more than 1 million is real interest costs, and about some 400,000 is basically just accounting valuations. A bigger effect is then below the profit after taxation, which is First, to mention something positive, revaluation of property, plant, and equipment. That comes from basically assets which we create, we reevaluate in IFRS or according IAS 16 based on the expected cash generation of those assets. So we do a revaluation, which becomes other comprehensive income. Those power plants we connected in the first quarter in Hungary had such a value of 2.1 million, which we realized here as a revaluation of property, plant, and equipment. On the other side, and this is the downside, we had a very negative effect in the first quarter. And this is the biggest impact we have from the coronavirus. Luckily, this is mainly or basically an accounting impact and not a real physical business impact. So we have foreign currency translation differences of 4.7 million negative. This comes from the weakening of the currencies against the euro. So as you know, part of our business or a big part of our business comes from the Czech Republic, comes from Hungary, which is denominated in Czech crowns and in Hungarian forint. And end of Q1, at the basically peak time when the coronavirus came to Europe and the financial markets went very turbulent, also the currency markets went turbulent, those currency weakened a lot. So the Hungarian forint from exchange rate to the euros went from about 335 end of the year 2019 up to some 360 end of at the 31st of March 2019. Something similar happened with the Czech crown from some 25.8 or so, or 26, went up to 27.5 at that time roughly. And this means for us that when we do the financials, we take the figures in local currencies from the local entities, we consolidate those figures, we reevaluate them based on the actual exchange rate, which creates these foreign currency translation differences. In this situation, this creates a huge loss, an accounting loss, I have to say again, or emphasized an unrealized negative foreign currency difference. It's non-cash. We can see now already the currencies have strengthened again compared to this time. The Czech crown is trading at 26.60 roughly. The forint is somewhere between 345 and 350 today trading. So we can see already if we would do the figures today, this would have a opposite extremely positive effect. However, even that positive effect is an unrealized effect and shouldn't be over valuated. So much to the total results. So our total comprehensive income looks unfortunately in Q1 very bad. If you take out the foreign currency translation differences from this and those unrealized ones, then we would end up with a positive result of about 400 or 500,000 euros actually. When we look into our balance sheet, we have fixed assets. If you compare here as well with the beginning of the year, here you see this valuation difference as well, because in reality our asset base was growing by those additional power plants we have connected in Hungary, which outperformed the depreciation, which was much more than the depreciation of the existing asset base. However, by the revaluation, this growth was eaten up on the asset base at the moment. Current assets went down a little as well in this time, mainly coming from the cash position, which went from 15 million to 9.7 million. This effect is basically the investments we did in this time. We will go into the cash flow statement just in a second. And other receivables and trade receivables as well went down compared to the end of the year in this period, which means that the total asset base went from 138 million to 127 million. On the liability side, or on the equity and liability side, first the liability side, liabilities went down as well. Here this is partially a repayment, but not in that full amount, so not the full from 88 to 83 million, 5 million was repayment. There's also a positive effect from these currency differences, only in accounting, I have to say here. Because also when we have liabilities denominated in Czech crowns or Hungarian forint, those liabilities are going down when we reevaluate them according to the weaker currency. So that figure might go up then again by having a stronger foreign currency. And then we have, so this is the total liabilities. Here is a split. Mainly all our liabilities are basically the bank financing for our photovoltaic power plants, which is non-recourse, mainly non-recourse project financing in the Czech Republic, in Hungary, and in Slovakia. It's about, here you can see 33.8 million. The rest, to 83 million, is a bond, or the biggest part of that is a bond we have issued on the group level on Photon Energy NV, which is traded in Frankfurt. I will go into that bond also a little more in detail a little later. So that's our balance sheet, ending up with an equity of 34 million that went down because these revaluation effects, again, accounting effects, non-cash, are unfortunately affecting as well the equity. So our equity on the paper decreased to 33 million in that period, but still the equity ratio is above 25%, which is for us a critical value that we want to keep clearly in our financing structure. Going into the cash flow, what did we do in this quarter? What happened? Comparing that with last year. So we have if you take our profit or loss adjusted by non-cash items, we would have a positive operating business with 950,000 euros generated compared to 1.1 million last year. Then we have some working capital changes, about 2.1 million. That's very much seasonal changes that we always have in this period, ending up on net cash from operating activities with minus 1.1 million in Q1. Again, if you compare this with previous quarters, and if you look in our data, you will see that this is always the first quarter as the weakest quarter, showing these kind of figures that will be in the next quarters turning around differently, very much. Then we have net cash from investing activities. We have spent about 2.2 million in Q1 for building power plants, those which we connected and after Q1, what I mentioned already, in Hungary as well. And we started preparing some work for some power plants, which we will connect later this year. So this is visible in the investment cash flow. Then we have cash flow from financing activities. This is on the one side, the repayments. As you can see here, we paid about 1 million, a little less than 1 million repayment of borrowings, which is the bank loans on the project levels. There we have payment plans over usually a period of, in the Czech Republic, 15 years, in Hungary, 15 years, and in Slovakia, about 13.5 years, and interest expenses. So 1.2 million it was, is roughly interest costs, which we pay for the bank loans and for the bond. This has increased towards the last year because we have relevered a few of our power plants in Hungary with bank loans, and we have increased a little the bond that we have placed to do further investments and build more power plants in the future. That leads us to a net change in cash and cash equivalents of about 5.3 million. This is basically a decrease from 15 million to 9.7 million at the end of the period. What is not reflected in that figure is also in the cash flow of financing. We have secured financing, bank financing for all those power plants which we have built and connected. We just have not at the time drawn down all these amounts yet from the bank. So in Q2 we will have some additional drawdowns coming for those already connected power plants, which will give us additional liquidity. As I mentioned, we are listed with both, with stocks, with our stocks, and we have listed a bond in the financial market. Our shares are trading in Warsaw at New Connect segment at the moment, and in Prague in the open market. That development has been quite positive over the last couple of, well, let's say during the last year. Development was very positive until this March, when the coronavirus hit the financial markets. Also, we basically went down from 7 zlotys to, I think, some 3 and something was the lowest value even. We have pretty much recovered now that we are at pre-corona values with around 7 zlotys trading at the moment. We hope that trend will continue as it was in the past. From all the business activities we have set out and we are planning to do, we are convinced that this shall happen. But yeah, this is on the one side. On the other side, as I mentioned, we have issued a bond in Germany. This is actually our second bond issuance. So we had a first one in 2013, which we then repaid in 2018, issued in 2017, a new one, which is due in 2022. This is our activities on the financial markets at the moment. And we also announced so far, but I think Mr. Hotter will then tell you a little more about this, our intention to list on the main market in Warsaw and in Prague, and potentially get also a Euro listing on the Frankfurt Stock Exchange in the unregulated market. So much about the company, and I really went through that very fast to give you an initial overview of our company. For those of you who don't know us yet, and with this, I would like to hand over to Mr. Hotter to give you an outlook on our business activity, on the strategy we are following, and afterwards, I guess we will have some time for some questions you might still have, hopefully. Good. George, please.
Thank you very much, Clemens. Good afternoon, ladies and gentlemen. Pleasure to be presenting to you today. So after the extensive introduction by Clemens, as we're going through our financials, I'll try to walk you through our strategy and how we were trying to implement it. So I will start with our solar business, where you've seen the numbers that we have achieved to date. So we've managed to grow our portfolio to in total 60.6 megawatts with the connection of 5 plants in Hungary, which we managed to do largely during the Corona crisis. So even in these very exceptional circumstances, we managed to ship all the equipment required to the site. We had to switch subcontractors. So we managed to do all that and connect those plants in time with minimum delay against plans. Hungary will continue being one of our core markets. So it's been the main market in terms of adding new capacity in the last couple of years. We see the general framework is very attractive. So the Hungarian government is very strongly behind a very aggressive expansion strategy in terms of renewables and solar in particular. Wind has fallen out of favor in the last couple of years, and given Hungary's topography, the potential of other renewable sources is absolutely minimal. And the last remaining would be geothermal, but there's also very little movement there. So it's a country that, going forward, wants to continue banking on nuclear, whereas most of you know there are expansion plans as well. But the second major pillar of the Hungarian energy mix going forward is solar, and based on the need of the economy, but also the renewable energy targets, we are probably looking at the potential of adding another 5 to 6 gigawatts of solar until 2030 from where the market is today. So we are currently still in the process of reviewing and hopefully acquiring additional projects that are based on the past support mechanisms, CART and META, We are also developing projects with which we want to participate in auctions for contracts of difference. These are in most ways structured very similar to the auctions that are also being conducted in the Polish market. There has been an auction at the end of last year in which we participated with projects with a total installed capacity of over 25 megawatts. It was for a relatively small volume. We did not succeed, but the new auction will be initiated in July, where we believe bids will have to be submitted in September, and there may be a second auction before the end of the year. So, going forward, the Hungarian market is following a similar model like Poland, but also other countries in Europe with auctions for contracts for difference. So this will be one of the directions, but we are also evaluating the potential to develop, build, own and operate projects on a commercial basis, on the basis of a power purchase agreement with an off-taker, or as we are already doing in Australia now with our 2 projects in Leeton, on a purely merchant basis, that means selling into the market, potentially applying certain hedging mechanisms. So in Hungary, we have a declared target of 75 megawatts that we want to build for the portfolio until the end of next year. So we are currently at 35. We have, as has been recently published, initiated the construction of 10 more power plants with a total installed capacity of 14.1 megawatts in Pusztakladány in the east of Hungary, which will take us close to 50 megawatts. And we are very confident, based on projects we are developing or where we are close to potentially acquiring projects, that will be able to meet the target by the end of next year. But what is very important to say is we see a lot of additional potential in the Hungarian market beyond the end of next year. So, as I mentioned, the target for 2030 and the potential is very significant, and we have developed a very strong team on the ground, so a very strong footprint, and we believe that this is a market that will allow us to deploy more capital and grow our proprietary portfolio. The second market that is relevant in relation to developing or adding new capacity is Australia, where as well very recently we announced that we initiated the construction of 2 power plants with an installed capacity of over 14 megawatts in Leeton. Those of you who have been following our company for a while know that this is a project we have been developing for a relatively long period of time, which had we obtained the construction permit pretty much 2 years ago. However, given that in the Australian energy distribution network, grid connection conditions are changing constantly, we had to make adjustments, which in the end led us to a model where we'll have 2 5-megawatt AC capacity grid connection plants next to each other, which allows us to be still operate both power plants to operate as so-called non-scheduled operators, so with minimum intervention from the market operator. This has turned out to be the most cost-effective model, and secondly, it has taken us quite a bit of time to secure the long-term project financing, given the fact that we believe going down the merchant model is the best route, as it will allow us to maximize revenues of the plants in the long term. The benefit of this delay has been that our investment costs over those 2 years have also come down very significantly on the back of falling module prices, but also prices of the other key components. Both Pusztakladány in Hungary and Leeton are planned to be connected in the fourth quarter of this year, which means that by the end of the year we should have an installed base of around 89 megawatts at least. So we are still working on potentially increasing that number. Of course, it would be very nice to hit 100 megawatts by the end of the year, but this is something that at this point is not certain. But even so, compared to where we were at the beginning of the year of 51 megawatts, I believe this is a significant expansion. And most importantly, and Clemens already alluded to that, with the power plants in Australia, we're setting a first step in reducing the seasonality of our energy generation revenues, which of course are highly seasonal, and the assets in the southern hemisphere will allow us to smoothen that a little bit. Of course, we have to build a lot more to even it out completely, but it is a very good first step. We, in terms of other markets, when we're constantly communicating or repeatedly communicating that we're looking at other potential markets. This we do with a relatively wide geographical spread. So here we look beyond the markets or even the continents where we are today, and we're constantly evaluating those opportunities that are outside Europe, sometimes the Middle East, sometimes some of them are in Africa and Asia. But here I think it is important to say that before we do a lot of analysis, and when we are happy with the initial analysis, on the ground research before we enter market, and we have to be confident that it is our goal not to enter market just for a single project, but we have to be confident that it will be a market that will allow us to develop a proper footprint and will be able to implement a sizable number of projects, either as a contractor or for our portfolio. But closer to home, the two other markets where we have initiated already last year project development activities are on one end Romania, where we have been on the ground for the last 5 to 6 years on the back of our operations and maintenance service business. But last year we strengthened our team and refocused our team, and we are looking at developing projects from scratch or entering into projects under development somewhere along the development process. And Romania about 12 months ago became a net importer of electricity. Historically, has been a net exporter. So we believe that the combination of the cost of land, the cost of energy in the market, and also the irradiation provide a good basis for positive economics of these projects. THESIS was Poland, which of course for us is strategically an extremely interesting market, because it is a significant economy. It has a solar market which is now in the process of accelerating. It's one of the most active markets in Europe. And last but not least, we also, of course, listed on the Warsaw Stock Exchange. And since we listed the first time in 2008, we have been asked when we'll be entering the Polish market. So the time has definitely come, which back then we were saying that when the conditions are right, so now they're right. And we have been also spending the last 6 to 9 months with already a small team on the ground, screening the market, looking at how best to approach the development or acquisition of projects. And the one avenue that we are taking and already working on is to develop our own projects from scratch, and which of course will take when we start with renting the land, will probably take 12 and more months to get to a ready-to-build project. However, what we've seen is that a lot of the projects that are being developed in the Polish market are not really ideal from the point of based on our experience and how we would like to implement projects. And this is why we believe that this DIY approach is has to be the backbone of our development efforts in Poland, but we are also looking at cooperating with other local developers in the Polish markets where we see that the quality of projects is good, or where we are at an early stage and we can influence the parameters of those projects. Our view of the Polish market is that there will have to be, and I think everybody who's observing the situation, it's clear that the need to shift away from coal is there. The incentives, some of them domestic, some of them coming from the EU, are also increasing, and energy prices are at such a level that we believe it will be possible to make the economics of power plants work. And this also underpins our general approach that the project we want to develop, we will most likely not develop in order to meet the criteria of the energy auctions, but we are more looking at building the plants most optimally at the lowest, giving us the lowest cost of energy so that we can compete in the commercial market. And whether that is through the conclusion of PPAs or as well, like in Australia on a merchant basis, sell into the market, will depend on the situation at the time when we bring those assets in operation. Another segment that we believe is very interesting here in Poland, but also in other markets, is the commercial behind the meter space. SMEs and industrial companies in Poland are facing very high total energy costs, and solar that generates at the site, on either side of such an energy user, can save those SME energy users quite significant amounts compared to the total cost that they have to pay, including distribution charges, which are set to grow even further in the next couple of months and years. So our strategy is continues to be that we want to add to our portfolio of power plants. This is the backbone. This provides stability to our revenues, and we like building and owning those assets basically for the long term, because they provide very stable and predictable revenue streams. And as the portfolio grows and the number of jurisdictions in which we own those assets grow, it provides a sound level of diversification. For the same qualities, we are also very fond of and have a very strong focus on our operations and maintenance business, which of course the revenue numbers per megawatt are significantly lower, but it's also at the other end of the spectrum in terms of the need for capital and the capital employed. And as has been shown before, this is a business we've been growing quite dynamically over the last year, mainly on the back of the growth in the Hungarian market, where we've gone from 0 to about 80 megawatts now in a relatively short period of time. And we believe that the Hungarian market will continue growing very dynamically for us. But as we are looking at the Polish market, operations and maintenance will also be at the forefront of our plans. And we are also now actively pursuing opportunities in markets where we have not been present to date, across Europe. And we are also identifying opportunities that will take us outside of Europe. And needless to say, as our asset base in Australia grows and we are building more and larger PV systems and plans for our customers in Australia, our O&M business will grow with it. One of the other major pieces of news in the second quarter has been a strategic investment that we have undertaken in Australia, and which for the first time takes us outside of the downstream segment into the upstream segment. It means the part of our industry that manufactures all the components. And we have decided to make an investment. This is a minority stake, small minority stake in a company called RAYGIN Resources that's based in Melbourne, which has managed to combine the solar thermal and photovoltaic approach to turning sunlight into electricity. So the generation equipment looks very similar to traditional solar thermal power plants, with the one very important distinction that in the focal point and the receiver, where the reflected sunlight from the hundreds of mirrors gets concentrated, the concentrated sun rays hit a newly developed, highly efficient photovoltaic cell. So one of those mirror fields in the receiver, in the standard size, can generate 1 megawatt of electricity and simultaneously capture heat with equivalent power of 2 megawatt of heat, which gets captured and then used used and stored in the form of hot water. So water gets heated up to just below boiling point, somewhere between 90 and 95 degrees, and electricity is used, can either be sent directly to the grid or is used to chill water in a second pool. Both pools are highly insulated, leading with absolute minimal energy losses, even for extended periods of time. So we're talking weeks and months. The losses are minimal, and when electricity is needed through a so-called organic Rankine cycle engine, the heat differential between the hot and the cold storage are used to generate electricity on demand. This is a system that can work both in an island setting. That means it can power a location that is not connected to the wider grid, or of course it can be connected to the grid, and it can also be used as a battery from grid supplied electricity. So if there's an excess of electricity in the grid, it can be stored by running the chillers in the form of the cold water, and this system then it can provide support services like frequency control, and it can completely change the supply profile of solar energy. So of course the solar field will only run during the day, but it's possible to turn this into base load, or it can be supplied at any given time in the 24-hour cycle. So the very important thing here is that the storage technology is without any chemicals. No precious metals are needed, or lithium. So it's just water, and so it's environmentally friendly. It has a very long life. So batteries typically, have a life of 7, 8, 10 years, depending on the number of cycles. So the system can run 30 years and longer, and it can be deployed in many parts of the world. This system will work best where there's a lot of direct sunlight. So we have currently identified around 30 to 35 countries that meet those conditions, where we'll be trying to initiate projects. Part of the investment, we've also entered into a strategic partnership with RAYGIN, where our role is to identify projects in the suitable target markets. Then when projects are realized, to act as the EPC contractor, and wherever the situation will require it, we are also open then to be the equity investor or co-invest with, for example, a utility that will want to integrate the system into the grid. It is a corporation that is opening a lot of doors for us. It will allow us to get into a lot of new markets, and as we are actually approaching a lot of potential customers with a technology that at the moment we are the only ones offering globally as an EPC contractor. So I already discussed Leading a little bit earlier. So these are again the some key numbers. In the very last design, our colleagues in Australia managed to squeeze even more modules into the system and get some slightly more powerful modules. So we announced, I think, 14.1 megawatts. So we have managed to increase that to 14.6 megawatts of installed capacity. And we are, of course, like here in Europe, also in Australia, energy prices have fallen during the COVID situation, but we see electricity prices already recovering in Australia, which gives us makes us confident that our financial model will be, and our assumptions will be met. Then again, I already talked about the push-pull ladder. So here again, we're actually using the same technical approach, which is we're using single-axis trackers, and we are using mono modules. And in Australia, all 14.6 megawatts, and in Hungary, half of our power plants are using bifacial modules, which is a relatively new approach, which means that the backside of the module is not covered with a plastic foil, but the backside is covered with a transparent foil. Some of the manufacturers only use glass, and the backside of the solar cells also capture light and produce additional electricity. That means that the efficiency of the module gets slightly increases, and by how much depends on the light that's available to the backside through the reflection from the surface on which the power plant is built. So we assume in our model that this will add about 5%, but we know that there are power plants where 10 and even 15% increases in energy yield have been achieved. And we believe that this is at the moment the best way how to build solar power plants. It means using single-axis trackers with bifacial modules that provide the high fields. This is the approach we are planning to have pretty much in all markets where we will be building power plants in the near future. So at the end of the presentation, I would just like, as Clemens already mentioned, asked me to expand on the capital markets strategy. So we have announced that we are planning to move our listing from New Connect in Warsaw and the free market in Prague to the respective main markets, and in addition to seek a listing on the Frankfurt Stock Exchange. So this process is underway. As a Dutch company, we're trying to find a prospectus with the Dutch regulator AFM, and in the next few couple of weeks, and we expect the approval and then the admission process to be complete by the middle of September, latest end of September, and this is at this point a pure move of our listing. So we're not raising any additional capital, and our motivation is has the driver of this is well, there's several drivers. One is that of course in the medium to long term, at some point we may want to tap the equity market. However, of course, on a daily basis, and our constant work is on increasing the value of our shares, which has of course again several drivers. One of them is how well we run our business, but of course the other, and how well we communicate. But of course another important aspect is the available investor pool, or to what investor pool we are actually a viable investment. And of course we are aware that there's a relatively large group of institutional investors that either cannot or are not inclined to invest in companies that are listed on NewConnect specifically, or on unregulated markets more generally. So basically, we are to a very large extent off limits for them, irrespective of our equity story. And as of course, with our bonds, which we have been targeting mainly investors in Germany and other Eurozone countries. We have over the last couple of months and years, we have met many investors who also like the equity story, but have actually shied away from considering even to invest in our shares, simply because they are not comfortable investing in shares that are traded in any other currency than the euro or maybe the dollar. So again, this has been a blocking factor for those potential investors. So what we are trying to achieve with this move is to remove all those roadblocks and to make our shares investable to a much larger universe of investors, both in the markets where we're listed, and here particularly Poland is important, but also then in the Eurozone and globally by enabling investors to trade our shares in euros. We believe that maybe not initially, but over time, that increased investor pool will have its positive effect on the valuation of our shares, everything else being equal. And in addition, as we are also now having an increased focus on the Polish market, we believe that there's a very nice potential that we want to exploit for an interplay or a synergy between our capital markets presence, which of course through our move to the main market will be more visible, and our future commercial activities in Poland. So we believe that in our commercial activities, it will help that we are listed on the main market. And of course, we also hope that the fact that we're developing our commercial activities, the interest, particularly among Polish investors, and this probably covers both institutional and retail, will become more of an addressable story. So I think this brings us to the end of the presentation, and I would like to thank you very much.
Yeah. Maybe we have there's a few questions I can see on the.
Yes, at this time we have the Q&A. So I just wanted to thank for the attention, and I think now we are moving to the Q&A section.
Yeah, maybe.
Do you want to start?
Well, there is a few questions. I think directly it would be good for you. The first one is about is simple about the presentation as such. If this will be published on the webpage, we answer already yes, that this will be published on our webpage. I guess also on the on the Stock Exchange Innovation Day forum as well. The second question is about do you plan to build a PV plant in Poland in 3 years' time perspective?
The answer is, I think this we can answer decisively and shortly, yes. So okay. I would actually hope that we'll be able to that in short.
Okay. The next question I can see here is, do you believe that current auction model will sustain in 3 to 5 years perspective? I assume this is meant the Polish model.
Yes. Well, I mean, this is a question that it's slightly difficult to answer because they're probably at this point not completely tuned into the powers that decide the energy policy here. We have picked up some signals that there are efforts to extend the auction mechanism beyond the end of next year, but I wouldn't know whether that will really happen. Well, here I think we don't have that many questions, so I will expand a little bit on this because it also is important for our thinking about the revenue models going forward. So this, when PV started 10 years ago, there were feed-in tariffs which provided stability. Later on, there were other similar mechanisms. And these contracts for difference that are the subject of the auctions are now where the market has basically developed over the last couple of years. This is basically the model that employed across Europe to support renewables. And again, the main reason is to provide revenue stability, which is mainly important for financing banks. So this is something that makes projects more bankable. But what we've seen over particularly the last auction in Poland, is that the winning bids in the auctions started to converge very closely to the over market price. Of course, now with the market price drop during the COVID situation, the gap has widened again, but we came already very, very close. And of course, that contract for difference it provides certain stability, but on the other hand, it's also the upper price limit. It means that if a situation occurs where the market price moves beyond the price that has been won in the auction, then the investor will have to pay back this contract difference. And our thinking, and this is something where, of course, I would not claim that all the banks we talk to are already completely in line. It will take them time to better understand the situation. But I think with what is happening now across the world in terms of money printing, and this is something that's happening in the US, it's happening in the Eurozone, also in Poland, also in the Czech Republic. And with a PV plant, we're talking about very long time frame. And it will run for the next 25, 30 years and longer, possibly. And I think that the money printing we're seeing now, sooner or later, will lead to growing inflation. And in looking even at the 15-year time frame of the contracts for difference, much sooner than those 15 years. So I think that a lot of these contracts for difference will actually get into a situation where, in a general environment where prices are going up, I will just be receiving what I put into the auction, and everything that I actually get above that from the market, I have to pay to the government. It would be great for the government. So basically, I'm giving up the upside. So we're looking at PV today as actually a very exciting asset, because I can build it already very competitively. I'm probably able to lock in long-term financing at these very low levels of interest that we are seeing today. But if I take a merchant approach and sell into the market, I have virtually zero credit risk, and I will be benefiting over electricity prices that will be going up in the medium to long term. So we believe it's actually a better investment than real estate, and therefore we are not really so keen, and we don't want to go down the path of the option. So whether it will last another 3 or 5 years, I cannot answer. And in relation to what I just said, which leads into our strategy, I dare to say that we don't care.
Maybe to add on this, George, because there's another question, what is the % split of PV auction model revenues in your company? Well, we can say it is relatively low, basically status quo zero, and as you just elaborated, we're not going down this road.
Well, of course, I mentioned earlier that we are planning to participate in the auctions in Hungary. So there we will try, but if it doesn't work out, it's not something that we'll be tremendously unhappy about. But in Hungary, there are certain reasons why it makes sense to at least explore this, which are unique to the Hungarian market. But also there, majority of what we build in the future, we want to build irrespective of the option.
Okay. Then so there's
maybe a minor element.
Thanks.
Then the next question is 1 megawatt planned for less than 500,000 euros. So
there's another question then as well from Jarek about if this.
So if we're talking about the power plant inside the fence plus the transformer, then then yes, I think we are already seeing. I think it's already possible to build it even for materially below that. But then what has to be added, and that is very unique to every project, is the grid connection costs and the necessity to build a line to the grid connection point, which on any project can be a few hundred meters or an access road. So inside the fence, including the fence and the security system, yes, it's possible to go below €500,000. And again, the bigger the plant, the cheaper it gets per megawatt.
Okay, thanks. I think I will take the next question. How do you value the PV plant through its life cycle in the balance sheet? What we do is, according IAS 16, you can reevaluate the power plants, so either at market prices versus having them just at cost, at investment costs in your balance sheet. The market prices in this way are evaluated since it's difficult to find market prices for power plants. The valuation is done based on a discounted cash flow model. So we calculate the discounted cash flow of the photovoltaic power plant basically through the economical life cycle, which in case of feed-in tariffs is set to the period of the feed-in tariff. So, for example, in the Czech Republic or in Hungary, where we have 20 years in the Czech Republic or 25 years in Hungary, we take this period for the discounted cash flow calculation, take a weighted average cost of capital, respectively. In our valuation models, we calculate the discounted value cash flow to equity and take the indebtedness. To be more precise in this valuation, those models are clearly reviewed by our auditors, so we can put them into accounting. And every quarter, basically, we look at those models, see if the parameters, the assumptions are still correct, and if not, we would make an adjustment. If there would be a necessity to revalue them, we would do so. But so far, this was not necessary during the normal course of business. So that's about the evaluation part. The next question is...
So I think this will take a long time. So first of all, in most markets, the PV penetration is still very, very low. And of course, in some parts, a growing share of renewables and of particular intermittent sources like solar and wind has an impact on the grid. But we believe that, first of all, there are ways how to build solar plants to reduce the intermittency, even without using storage. But then on top, I think what we'll see now is a major proliferation of storage throughout the system. So in some cases, maybe at the plant level, but throughout the grid. And Poland will also see a lot of new additional investment. I think is much more than what people think at the moment. So I truly believe we're just at the very, very beginning of massive deployment, which will be much more significant than current numbers. And if our transportation system really moves into using electricity as its major fuel, as is planned by government and the EU, and therefore electricity use increases, I think solar will just get deployed wherever. And
okay.
I mean, over the last 12 years that we're in the industry, reality of PV deployment has always been ahead of forecasts that were 5 or 6 years. That had been made 5 or 6 years earlier. So the market the PV market has a tendency to outperform, and I think be the case for quite a few years into the future. But I'll go to the next question.
Maybe because I'm not sure if this is public. So the question is about inverter technology for our...
I can see it. Yes. So Well, we are, and I mean that is not a secret. We are on the power plants that we are building now for our portfolio that we have been building in Hungary. We are using Huawei inverters. When we started building power plants in Hungary, we made a very detailed research and decided that Huawei provided the best at the time. And I think to this day, it hasn't changed fundamentally. Provides the best combination of quality, price, and also stability of itself. So in the solar industry over the last 10 years, we've seen many module, but also inverter manufacturers go out of business, which then leads to issues with warranties and service and stuff. So that is an important part of our consideration. And Chinese inverters, yes, of course, they're all making sure that they're compliant with the rules and regulations. They're very active here. 10 years ago, when SMA was still the gold standard in the industry, there were very significant doubts whether Chinese manufacturers would ever be able to catch up and give them trouble. And I think Huawei, also some others, have taken a big bite out of the market, and as now, so yes, they're usable. We're using them. We're not married to them, so we are trying to pick the best available technology given situation. Quite possible next year we start off a specific sites, start using some.
Okay, and I think the last question I can see is about our expectations on IRR. When you look at new PV project, what is the minimum IRR acceptable for you?
Well, this is a question that the first sentence has to be like with Radio Yerevan. Yeah? It depends, and it depends on a lot of factors. Of course, it depends on in which country, what the revenue model is of that of such a plant, whether it's something that at least on the surface looks stable, like a feed-in tariff, country difference, or a PPA. It will depend on the availability and cost of debt financing. So the general interest level will have an impact. It will be, and then what kind of leverage we can get from any financing institutions, what the total cost of debt is. That means essentially what kind of margin the lender is applying, and that has an impact on our total cost of capital. When we in such a situation where debt is available, then what is really important for us, we're not so much looking at the total project IRR, but what we are mainly concerned about is the return on the IRR on our equity investment and equity. So we would, in our own investment analysis, that would be the main issue. In a situation where we are also developing the project and the final market value of a project becomes part of the project equity, so the value uplift there. That means that on a cash-on-cash basis, our economic equity ratio is lower than that. But so essentially, on the equity we deploy in projects, our returns have to be above the cost of capital. So what we are mainly looking at is the net present value, which then translates into balance sheet. And across the portfolio, what we want to make sure is that for every euro of capital we deploy, we add as much net present value to our portfolio and therefore to our balance sheet.
Okay, then there's another question. How much does it cost in EU to buy a 1 megawatt plant connected, say in Poland? How does that compare to your valuation? Does it make sense for you to buy projects on early stages, planning one auction, pre-built? Maybe we should explain once more, George, the model of our integrated approach, and I guess the rest is difficult to answer.
So again, it depends. I mean, I'll try to answer it in general, and then with respect to our strategy. So So first of all, it is not part of our strategy to buy connected assets, operating assets from other developers or investors. I mean, there may be situations theoretically, but it's definitely not plan A and not plan B of what we do. So into our portfolio, we add plans that we have for sure built ourselves, and ideally also been instrumental in the development. The price when you buy a connected plant will be a function of its revenue model. So if you look at if you want to buy a plant in, for example, Germany that's 5 years old and has a feed-in tariff of maybe 25 cents, then that plant will be quite expensive compared to what it takes to build that plant today. But that's not because the components that are 5-year-old have become so valuable, but because of always the income stream and the present value of that determines the value of price. So again, here in Poland, it will depend on what the auction on connected plants. It will be what the auction price has been and how much then the performance. So typically, as a general rule, the most projects become most valuable 1 to 2 years after they're connected. So if there are many buyers, those buyers that have the lowest cost of capital, lowest return, they only buy plants that have been operating for 1 or 2, sometimes even 3 years. So when a plant has proven that it's operating well, that this is typically where it has the highest possible price. But again, it's not our game. We're not investing in those. Our approach is to ideally develop from scratch or get involved in the development at the earliest possible stage. And very often we start cooperating with developers who have identified sites, and we team up. We very often provide the financing, our part of the know-how, and once the projects are ready to build, or at least the key permits have been secured, we take over and make sure that those projects are also bankable and to start building the financing, connect, and those. And generally, what the best approach is really depends on the level of sophistication of the investor, so an experience. So a purely passive investor should really only buy, in my view, a connected power plant that has properly checked quality advisors. Of course, if the investor is more venturous, maybe it makes sense to acquire a project that's ready to build and then get an EPC to build it and secure the financing. Again, internally, and if somebody is more adventurous and more experienced in this industry, then it makes sense to get into some earlier stages of development.
Okay. I think, George, one thing is we have, I think all questions so far answered, and basically the time is up. It's 3 o'clock. So I think it's time to close the session here. Thank you very much to everybody for taking the time to participate at this presentation. Thank you for listening and asking those questions. If there's any other question coming up, we are at your disposal. Please get in touch with us at the presentation. There's contact details. We are happy to continue the discussion. Thank you very much and goodbye.
Also for me, thank you very much. Bye-bye. Have a nice day.